last Friday, we went off right at 105 in euro, and end of the week they usually have big option expirations in the spot market, and I think there were over 12 or 15 billion dollars of 105 options that rolled off Friday. And where did it close? Again, do the market makers manipulate the market? No, but the guys writing the options, if they can get them to expire right at the strike, it's best for them. So it's interesting sometimes how that happens. And we went off right at 105. Tried a little bit rally last night. This reminds you so much of Friday morning too. They tried a little bit higher, couldn't hold on to it, and now we're sub 105 again.
Yeah, if we can bring up the platform here, you can see Pete's talking about euro dollar at the end of last week going out right at 105 here. If we can get the platform up, guys. And you see a little bit of a rally last night, and then, yeah, Pete, you're exactly right. Sold into here throughout the European session. A little bit of bounce going into the U.S., but, yeah, continued dollar strength as I look at all the pairs. And you can tell me where you want to go.
Aussie taking it fairly hard on the chin. Aussie, we had PMIs come out in China last night, which weren't great. That hit Aussie. Again, Aussie the most aggressive in where they are on rates. Most aggressive. Canada's actually the most aggressive where they are on rates right now with that cut they had last week. So this week we've got the Fed on Wednesday foregoing conclusion it sees 25 basis point cut. Bank of England on Thursday and Bank of Japan on Thursday. So which is either hold or hike. So they're the one wild card in terms of they're not looking at cutting, or the question isn't cut or hold still or hold steady. It's actually hold or hike. And
I can tell you what the market's telling you, which is there's not going to be a hike.
No,
because we're 154 bid.
Yeah,
unbelievable. I mean, this is a pretty crazy move as we speak.
It is a pretty dramatic upside bid here. And I think they telegraphed that last week a little bit through news that they were going to wait, give themselves some time. Could they catch everybody off guard and hike? And will that have a more knock-on effect to the yen trading up near its highs again at 154? Sure. Are they inclined to? Honestly, I don't think anybody's inclined to.
Look at that aggressive path there from negative 10 basis points to positive 25.
Yeah,
good
huge
for them. I mean, it was something because, I mean, let's actually zero in on this dollar yen piece, because yes, this is the 15-minute chart, and you're seeing U.S. dollar is right now as we speak is really catching a bid back through 154, and if we look at the daily chart for the last several weeks here, going back to mid-September, it's been pretty bullish for this U.S. dollar off of its lows of 140. Now, keep in mind that a lot of this stuff in here was the Bank of Japan getting a little bit more hawkish, getting the most hawkish that it's been in a decade. I think it was the first hikes that they committed since pre-financial crisis. That, don't quote me on that, but I'm pretty sure that they cut during the financial crisis and then just stayed flat and then went negative a few years ago. And so cutting from negative to positive did give this yen a little bit of bounce and brought dollar yen from its highs of 160. But man, if this market isn't drifting right back towards those highs, and like I say, as we speak, 154 bid. I mean, in the grand scheme of things, you go out historically, Pete, we are not out of this price extreme zone that we've been in for the last year or so.
No, it's nice being able to go to the monthly once in a while just to look at context, because I remember trading dollar yen at 78 and 80, and being too soon to the game before we actually put in the lows. But I think this speaks to, we talk about the relationship of FX and interest rates. It's not just the nominal rate or where rates are right now, it's the path. And if the path was going to be, they hiked and they were going to hike several more times, then you saw that two-sided action come in and us quickly trade down sub 140. Think about that. We were sub 140 briefly. So we've had a 10% rally back in dollar yen. That's a big move by anyone's outsized terms. So, and I think what this is saying is that, well, the perception of the market now, and it's just a collective perception, is that the trajectory is no longer upward. It's either flat with maybe a little of an upward bias. So putting this bid back in, yeah, it seems like this is the path that the market wants to do. It'll be interesting to see if it seems like the dollar itself is having a lot easier time rallying than falling. So we see little pullbacks like we've seen on an intraday basis, but they don't last very long. They're relatively shallow. They don't challenge some of the longer term longs in like dollar yen right now. Nobody's been challenged as to if you bought it anywhere on the way up here, you're sure there's always ebb and flow, but you really haven't been challenged.
Well, and keep in mind that these interest rate dynamics do also directly translate to the overnight funding rates that translate to forex positions. And so for a second there, it looked like this positive, currently, these are indicative prices currently of if you were holding long dollar, short yen, of getting, a pip and a quarter today. It looked like that gap was going to close for a little bit, because if you remember at this point in time, God, I need to get all these markets off my board because they're distracting me. At this point in time, Pete, amid some of this action, we were pricing in more cuts from the Fed by the end of this year and into next year. And like you were saying, there was an idea of, okay, the Bank of Japan is finally hiking and they might be aggressive. They haven't been aggressive, and the market's telling you they're unlikely to be aggressive here this week. And so with that in mind, you're still getting people, you probably got a lot of people on that dip to 140 who were like, hey, I'd love to still have this carry trade going on. Remember, it was a great carry trade unwind. Well, the carry trade is still very much there, and people are putting it back in here. A couple of things that we know for certain: this market will revert lower at some point. But it has in the past. If you go back to the monthly chart, when we get up to these highs, it reverts back, and it has even in recent years here. If you're just doing a case study of triple digit dollar yen, we got up to 150. Remember, we just touched it. We didn't even spend a month there. Came all the way off below 130, did it again, came down to 140. It was kind of a diminishing returns kind of scenario. Got up to 160, came off close to 140, and now we're 154. So the one thing that's really nice about forex markets, especially major forex markets, is historically they have mean reverted in their price. The question becomes, from what price will this market mean revert? Because the last several sessions in a row, traders are telling you, we don't think this Bank of Japan is going to hike now. We don't think they're going to even hike that aggressively. And we'll take this carry trade to be long dollar, short yen, until at least 154, which is where they're sitting now.
And we'll get paid to do it. Absolutely. So, and I think it resonates through as we roll into the new year here. Tariffs, whatever, that piece of it. Again, one way to combat tariffs is to slap tariffs on the other guy. Another way to do it is go ahead, put a tariff, I'll make my currency cheaper. And it negates part of the cost of the tariffs. So I think, is that are they front running the tariff stuff? I think maybe that's part of the decision making and part of the negotiations back and forth between countries. I don't know if I put too much credence in that, but it is something to be thinking about.
Well, maybe it's even more of just like this is a new unknown for us as a major central bank. And if they were on the fence with this hike, and listen, the meeting is still on, Wednesday night, Thursday morning. They could hike. I don't know anything. All I know is what the market is telling you, which is, 7 straight sessions in a row of higher dollar.
And that's an interesting point, too. 7 straight sessions. We're getting into a statistically interesting area of, will we have an 8th or a 9th?
Well, and look back, we've done this before where it's been several sessions in a row, and then a big mean reversion, several sessions in a row, a big mean reversion. And obviously this one being one of the wildest going into the carry trade unwind here. But again, like this market can do this until 160.
Right.
It's shown that it can do it to 165. There's nothing holding this market back when I say that forex markets are historically mean reverting. Right. It can do whatever it wants. It's likely that it will mean revert again, but yeah, you're right. We're getting into this statistically significant period of several trading sessions in a row. Maybe this is a little bit of a buy the rumor, sell the news on no hike from the Bank of Japan when they finally come out and no hike.
Right.
Maybe you see that bid try to continue and then it gets brought back down to earth a little bit. Maybe they say something like, we are still hiking. We're just not hiking this meeting. We'll see.
It'll be interesting to see. And, it'll be interesting to see what the Fed says too. Because, at one point they had 6, if not 7 hikes next year. They're down to 2. Which almost, again, being the contrarian, I thought 7 was way too many. Maybe 1's too few. I don't know. Cuts, I'm sorry, not hikes in the U.S.
Gotcha.
I'm sorry, for the Fed. So they've dramatically reduced the amount of cutting the Fed will do next year. Will that start to, is that helping to add a bid into dollar yen? Absolutely.
Yeah.
Now, maybe that's underestimating the amount of cuts, and maybe if those cuts come back in, but right now we're at all-time highs in equities. I don't think there's any great rush for them to cut as aggressively as they had talked about.
And it's funny because that was the point I guess I was making a little bit with some of these central banks, especially the Bank of Japan, who's already near zero. I think there is a little bit of a wait and see mentality. Right. We got the same thing out of Australia, even though a lot lot of Australians would probably contend
Aussie Kiwi.
that like, hey, we should be cutting probably. They didn't cut.
Right.
Canada is one of those places. Their unemployment's so high that they're like
they're going all in.
We're not even thinking about this. But there has been a little bit of a wait and see with Australia and some of these central banks, and likely with Japan as well. But yeah, this Aussie. Here we are on the 15-minute chart. Well below. I mean, look at all this trading below 64.
Right, sub 64, sub 65 is cheap. Again. Getting a little bit of weakness fell on with a weak Chinese PMI. We're going to get our own PMIs here. Let's take a look at Kiwi really quickly, too, before we bounce out.
Sure. Very similar.
Yeah. Actually, structurally, a little bit softer.
Yeah.
Even. So Aussie Kiwi continues to weigh a little bit on this.
This CAD also maybe the weakest of the three.
Yeah. And I think this speaks to exactly what you said. They've got no concerns about perception of being too aggressive cutting. They've got numbers. And I think, again, with the talk going back and forth, they're not going to be concerned about 145 Canada. I'm not saying that's where we go, but it seems the path of least resistance right now. Short of it going so far, so fast in one direction, there's not a lot necessarily
very comfortable up here.
Yeah, two-way trade. But this should be an interesting week. We've got a lot of binary events, which means, again, don't worry about guessing whether or not they're going to cut or raise. Be prepared with where you want to get involved in the markets. All we want is the opportunity to get some back and forth here. We're getting it. Vol levels are up, so we're getting some bigger ranges trade, which is great. As we roll into the end of the year, it'll be interesting to see where we go off the end of the year. Not that is a big marker, but we'll see how that trades through. Have a great day.